And we're back. Wednesday morning. Holy smokes, it's only Wednesday.
Yeah.
What's going on, Paul?
Not much, man. Not much. Enjoying the summer. A little rainy this morning. Had to walk up some stairs to get to the office today.
Yeah, it was, I was running late. I ordered an Uber to the Starbucks, which I don't want to make a habit of because it's like a pretty costly morning.
Oh, yeah.
And then, yeah, walk like 2 coffees for you and me.
Mm-hmm.
We're here together.
Yeah.
Balancing act trying to get through because the door is locked this early in the morning.
Mm-hmm.
And so I balance the one coffee on the other, and it's only a matter of time before, like, I've done this now like maybe 40, 50 times over the course of the last like year or so. Got girlfriend I live with now, friends here at work, finally after 10 years, having 2 coffees at a time and then having to open a door, I balance the one on the other. And it literally is like, I wonder what the error term is on this, because at some point these coffees are going down.
Yeah.
And they haven't yet. And there's no way that I'm that good. So I don't know if it's 1 in 50 or 1 in 100, but I'm due. Didn't happen. And then like I get to the little corridor thing where we flash our card and then it tells you what elevator to get into. And I'm like, all right, awesome, I made it. No elevator shows up. And then, yeah, they're like, oh, yeah, the elevators are broken. We're going to have to get you a pass to get up to the stairs. That takes like 5 minutes. I'm just sitting here holding these coffees. Multiple people that we work with kind of like come in. Beth comes in and she's just like, oh, Frank's like being like I'm like not talking because I'm like in my head, I'm just like, I just need to get these coffees upstairs. They're so hot and I'm going to drop them. And then we have to walk up the 6 flights of stairs. And I'm in a long sleeve shirt. I'm like sweating. Pretty rough way to start the day, but it's only up from here, man.
That's a good way to think about it. I mean, the white shirt, maybe when you get coffees, might not be the
trust
best
me,
move.
Thankfully, Starbucks technology, what they have done has made it pretty hard for the coffee to drip out of the top. The top is like some kind of newfangled like plastic-like technology that really gets on top of that cup. And then they have the stopper in there. But yeah, I'm wearing a white shirt and white shoes. Yeah. And I'm just like, if this thing goes down, the whole thing's over with. Yeah. Like, I'm just going to go home.
Yeah, right.
But like, 2, if these things, like if I squeeze too hard and they start to drip all over me, like it's going to, like, I'm going to have to change. Like, it's not going to be good. But we made it. Mm-hmm. It's Wednesday. That is definitely the most stressful thing that has happened maybe in America this whole week, is Frank trying to get into the office. It's definitely not the war going on. We resolved it. We didn't resolve it. A couple of head fakes throughout the last 48 hours. But Paul, looking very much like the Middle East, Israel, Iran, U.S. volatility has subsided, at least for now.
At least for now. I mean, I would always say there's a potential that could kind of reignite. You always kind of have to play these things by ear. I was talking with a couple of friends kind of over the weekend, like, what do you think's going to happen next? And I was like, I have no idea.
No clue.
I'm going to keep paying attention to it, especially with moving markets. I mean, the oil open shocked me.
It's shocking. It's crazy. I'll say that, like, yeah, Saturday night into Sunday I've been likening it to like early pandemic, like right before the pandemic. I had like concert tickets for some concert, and the dude was playing 2 nights in Chicago. I had tickets for the second night. He played the first night, and the second night got canceled. And I was like, oh man, like, okay, like I guess I'm not going to this concert. And then like it was whatever day that was, like March 15th or 16th, whatever it was. And it's like, oh, like I have no clue what's going to happen next. Yep. Like, am I supposed to go to the office next? And that Saturday into Sunday was a little bit like that, of like, oh man, like we just, I mean, I'm not like a military expert, but like we just attacked Iran. They're threatening. I have no clue what's going to happen next. Obviously, everything has, the market being the first place that'll kind of tell you how much fear and risk is out there. Since then has pretty much subsided pretty consistently, aside from like one head fake. I think it was on like Monday afternoon. That was like, oh, actually, Iran has more nuclear weapons, and they're threatening with those. Whatever that news story that was that came out Monday late afternoon, big swing, and then since then it's been pretty consistent in the opposite direction. But it is interesting, Paul. We're going to dive into some crude oil correlations in a second. But these markets in high volatility times, Tasty Trade has proved this so many times throughout the years. When vol goes up, and it goes up in a way like it is now, people might be saying, what vol is Frank talking about? Is he talking about equities? Is he talking about crude oil? Vol and everything is up the last couple of weeks, heightened with this geopolitical risk. When that vol goes up, the correlations between a lot of these markets go to 1. And not always positive, but like the relationships get very binary in a way. And you could see that with crude oil being kind of a negative correlation to equities and crypto and more risk on markets, and the US dollar also being a little bit of a negative correlation to those risk on markets. And yeah, it was interesting. Sunday night and into Monday morning, you saw pretty much the high prints for those fear markets, VIX, crude, US dollar, in this particular case. It's not always that way, but in this particular case. And yeah, I think crude's high print, same as last week. So I don't know if we go 3 in a row here, this weekend is the same as the last 2 weekends. We'll see. But the last 2 weeks, it's been high print in crude on Sunday night, and then a pretty precipitous fall throughout the week. But this has been a crude oil crash. I mean, there are people around the office joking that it's going back to negative at this rate, because we've gone from, I mean, where'd they open it at, like 75 bid? And they were looking like they were going to hit 60 yesterday. Like, it was crazy.
Yeah. I mean, we were talking about potential limit downs on Monday, as like we were at kind of a stone's throw away from it, but we didn't get there. But yeah, the dollar market was interesting because on Monday, or really Sunday night, you had really the dollar strength, but also the Swiss franc yen strength as kind of a corollary market, where you saw basically euro dollar down, cable down, and then you saw dollar yen, dollar Swiss about flat, which tells you that basically there's kind of strengths on both sides of that of those markets. But yeah, that's kind of where you were. I mean, that's where you get in a true kind of risk off mode, where you have that dollar strength and also yen and Swiss strength.
Yeah, I was gonna try to draw. Maybe we should start drawing stuff on this show. This right here is that Sunday night area where you have the immediate. This is the first 30 minutes of Sunday night, where you have that knee-jerk dollar higher, VIX higher, crude oil higher. Like I say, those kind of, in this particular instance, flight to quality, risk off, whatever you want to call it. It doesn't really matter. Those moving higher. And then, like you say, there was some dollar give back that I wouldn't say was necessarily correlated with like risk coming off the table immediately. To your point, there was some dollar give back in here and that dollar Swissy market, because yen and Swiss franc are kind of risk, like they're risk off markets in their own right. And so there was some battling back and forth there. But yeah, what was interesting is you saw the dollar strength build throughout the rest of Monday going into the first U.S. session. This is the U.S. Open right here. And maybe should I just grab my thing and bring it over here? This is the U.S. Open on Monday now. And obviously you have a much higher U.S. dollar at that point. Crude and some of these risk off markets are starting to come off at this point already. Like I say, last 2 Sundays in a row, if you want to take a look at it, go look in your platform, that the high print for crude the last 2 weeks is right on that Sunday open, and then they pretty much annihilate it from there. And the annihilation this week has been wild in that market. But then you started to see a pretty high correlation between, okay, crude is getting whacked, VIX is getting whacked, US dollar is getting whacked. And then throughout yesterday, Paul, it was a dollar bloodbath. And now I can get rid of this guy. Do I just delete it? Look at how easy this platform is. It was a bloodbath throughout yesterday, up until yesterday around 10 or 11 in the afternoon. A little bit of a dollar bounce, but really closing this dollar market on its lows, whether you're looking at dollar yen here or you're looking at this euro dollar market back, not just a 115, Paul, 116. We'll do you one better. And here around the U.S. Open, looking like they wanted to get up to 117 yesterday. But a lot of interesting dynamics now going into the mid part of this week, and some interesting stuff that we still have to unravel. I mean, Fed Chair Powell spoke yesterday. We saw some decent volatility around that. Speaking again today, obviously Trump, and the geopolitical risk on the table can go in any direction, completely unknown there. But interesting to see that throughout all of this, you have here in the all FX pairs, you can see a lot of unches across the board, but this yen is getting killed. It is it's one of those things, Paul, that this week you've had multiple stories that are pro US dollar and anti US dollar, just in terms of price action.
Yep.
And no matter which way you swing it, the yen is getting killed, not necessarily just against US dollar. You might say, oh, it got back under 145. I mean, here with this euro yen, we're back close to the highs. We're within 100 points of 170.
Can you back out on this chart on euro yen? How high did we get on this one? This is the ones I can never remember. Okay, so
this is the highs for the last year, pretty much. And yeah, last summer they got up to 175, but we're pretty much there with this euro yen market.
Yeah, I mean, the yen continues. When it gets weaker, obviously they're not. Seems like they're not going to be raising rates like they said they were earlier in the year. They obviously have some more risks out there now. They have a kind of geopolitical risk as far as energy. Japan imports lots of oil, so that's where you kind of get that. And then the euro's kind of continuously sneaky stronger all year, obviously with some dollar weakness and also some dollar losing favor as a risk-off market. That's kind of been a dynamic. I've heard some stats out there, and I won't be able to quote them, but people are most short the dollar they've ever been. It's it's almost became a crowded trade, and smarter people will talk to you about what that means, but
could unravel quickly, could have a lot of volatility to it. Yeah. But yeah, it seems like people are loading up long euro and sterling and loading out of their long dollar, which has been obviously a strong trade for the last couple of years. But yeah, this is just kind of crazy to me. Pretty much any way you swing it, the yen seems to be weakening against a lot of these major pairs. And yeah, obviously the historical extreme here with euro yen may be a little bit more interesting for those people who like extremes going with the trend. Obviously breaking through 170 would be interesting. You can see last time they did that, it was just like a straight march. You got one or two down days in a stretch of a month here where they just marched right up to 175 and then killed it. So these are really interesting markets with this cross. And thankfully, this is one of those crosses that is decently non-dollar crosses, that is decently liquid. I mean, it's the euro and the yen, two of the biggest currency markets in the world. And so something definitely to keep an eye on if you like those extremes. But man, if you like day trading and just back and forth volatility, the dollar yen this last week, I mean, this isn't the last week. This is the last 2.5 days of action here. And it looks like the most aggressive all trails map that you could look at. This is climbing freaking, I don't know, Colorado, Wyoming, Montana type mountains here, man. This is crazy.
Yeah. I mean, we're about 350 points in 3 days is kind of the ground we've traveled. All to say that we're back at about the 145 level again, and we're just kind of...
They love it.
Yeah.
They love 145.
Yeah.
But yeah, interesting to see here this morning, yen getting weaker, even though there's, like I say, no real sustained action anywhere. The only other thing worth mentioning is the dollar Swiss franc market got killed yesterday. I don't know if anybody noticed this, but we got right back down to what are in here. Let me scroll in. This is, did we break 80 cents? We did not, and we still have not.
Yeah.
But we got down to the lowest prices that's the lowest prints that we've seen in the data set I'm showing you right now, which is the last few months. But keep that in mind, because 80 cents and change, as I scroll out and show you more data, we aren't going to get any lower prints than that, my friends, going back to 10 years ago.
Swiss franc crisis, yeah.
Swiss franc crisis.
It's when they depegged from the euro right there.
There's a name for it,
Yeah.
and we're down to those prices.
Yes.
Pretty crazy. Obviously can keep going, but again, if you like extremes, it's an interesting one. Also keep in mind, it's Paul's favorite day, the T+2 Wednesday roll, and so you're getting some heavy rolls here. If you're on the short side of dollar, you're paying a good amount to take that through, what is it, 4 p.m. Central?
Yes.
5 p.m. Eastern. If you're long dollar, the indicative values right now showing that you would get, this is crazy. The euro dollar 3-day roll is up to 2 points.
Yeah. Yeah.
That's pretty wild. Haven't seen, I mean, we probably haven't seen that in years.
It got up pretty high during the 2022 when the Fed was kind of ahead of everybody else. It was pretty.
There's maybe like a month or two.
Yeah, it was pretty aggressive there. Yeah, there was a month or two. That kind of summer of 22 was interesting for the swaps.
Well, hell yeah. The swaps are interesting. The price extremes are pretty crazy when you're looking at that dollar Swiss franc and that euro yen. And like I alluded to earlier, we've got Powell set to speak this morning. We don't even have to wait till the afternoon. It's in 2 hours, my friends. They'll be asking him, I think they ask him questions.
Yeah. They asked him about supply and demand yesterday. It was funny. It was a funny clip
That's
I
cool.
watched.
Did he talk about, like, what is the economics thing, like butter and guns or whatever? Like, did he draw that graph?
I would hope he didn't have to do that, but yes.
You never know.
Guns, yes.
All right, let's try to get into some slides for just a second. Our good friends Glenn and Twitter Mike talked about some of this stuff yesterday, but I figured, why not let some of the old heads go through this stuff? That's you and me now, by the way.
I'm old now?
Relatively.
Yes, yeah.
We are.
Yeah.
Interesting study from our FX researchers looking at currency correlations to crude oil in different vol environments. We're going to start doing more and more of this stuff, Paul, because the people want it. They want the studies. They want the math.
They don't what they want.
They don't want opinions and biases from us.
Okay.
But just looking at this, given the fact that crude oil is trading in weekly $10 plus ranges at this point,
yeah,
why not take a look at when crude is volatile, like it has been? What do the typical correlations to currencies look like? We'll look at it in all environments, those correlations. We'll look at it in heightened volatility environments, and we'll look at it in low volatility environments. And if you want more details, this is the study. Glenn analyzed USO, the crude oil ETF, which you might say, well, that's not the real crude oil. But when we're analyzing stuff like volatility and correlations, it literally, the math shows a very small error term for like if you were going to use the futures or the spot market. Like USO is very liquid. It moves in the same direction as the crude oil futures or spot market. A lot of the time, there can be wonky stuff, like when crude traded negative, crazy stuff. We're not there yet. I think the research will be fine here. Looking at the last few years and the 6 popular USD pairs, combining some of those major currencies. And let's just look at it. Who cares about this stuff? Let's look at the actual numbers. Starting with all vol environments, that top row there, Paul, you're seeing a couple of things. One, crude and US dollar don't play nice, negative correlations. But are you surprised by how weak the correlations are, or which ones are showing the strongest correlations? What pops out to you?
Yeah. I mean, so you expect CAD to have the strongest correlation, dollar CAD to have the strongest negative correlation. It is weaker than I thought. I think it's weaker than it has been historically. And I bet you if we looked back at this, 3 or 4 years ago, it might be a different story as far as that goes. There's obviously with these correlations, there's other things going on in these markets that cause the correlations to not work perfectly. But yeah, that's the kind of interesting one. I was surprised Oz USD has a positive correlation with crude. But it's a commodity currency, so it's got some relative kind of correlation
one of those like
there.
knock-on effects maybe of like, how like in the NASDAQ there's like a couple different sectors of stocks, and you might like pick two of them out and be like, well, like why does this AI stock have anything to do with like this financial stock? And it's like, well, they tend to move in the same direction, and if the NASDAQ is moving up or down, those two are probably going to have a high positive correlation. Same here, where it's like Aussie maybe has little to nothing to do with crude, but since it's correlated to CAD and CAD's correlated to crude, it gets like dragged along. But yeah, it's that one is pretty solidly correlated to crude. It's not like dollar CAD is showing like a 0.5 or 0.6 correlation, and Aussie is showing 0.2 or 0.3. There, it's pretty neck and neck. So those two providing the best correlation. Obviously, again, U.S. dollar, crude oil, historically negative correlation. And so if you're trading Aussie USD as a crude proxy, long crude would be long Aussie USD, short crude would be short Aussie USD. On the USD CAD front, long crude would be short USD CAD. Again, the short USD being the long crude proxy and vice versa. Now, when we look at high vol environments, what I was alluding to earlier of, when vol increases, correlations pretty much across the board, across asset classes, go to 1. They don't all go to positive 1, but they just get stronger historically. And you see that here, Paul.
Yeah, absolutely. I mean, you saw that. I mean, your dollar CAD gets way more pronounced now, right? Even like the yen and Swiss, I think it's a little interesting that they have that negative correlation. Obviously,
going from essentially unch to like a little bit of a correlation there.
And it does make sense because when you think about crude oil being priced in dollars, that's how I like to think about it. I talked to Glenn on the way out yesterday, and I want him to do some more of our cross pairs, take out the dollar effect and see what the correlation. So that's coming. Hopefully the oil volatility keeps up so we can keep talking about these correlations. The one that I really am interested is CAD yen or CAD Swiss franc would be a very. You take basically the uncorrelated with the correlated. Obviously, there's some covariance. You guys are better at math than me on that piece, but that's kind of where we're headed. But it's interesting to see how strong some of these correlations get as soon as you add in the high vol.
And last piece here, in low vol, you might have seen this coming, but these correlations do drop off pretty significantly. Just get closer to unchanged. When crude isn't moving around very much, there's not really a rhyme or reason to the relationships between different currencies and crude oil, so your pairs trading and everything might get less interesting. Here are some takeaways for you. In the long run, individual U.S. dollar pairs are fairly uncorrelated. A lot of unchanged you saw there with your yen and Swiss franc versus dollar versus crude oil. In high volatility, U.S. dollar correlation to crude oil is slightly elevated, especially that dollar CAD as a good proxy. High vol environments, the correlation among U.S. dollar pairs also increases. So that's an interesting side piece, I guess. Going back to this chart, you can see the greens and reds between the different pairs get more pronounced in high vol, and we're just looking at high crude vol. So again, vol gets heightened. Those correlations pretty much across asset classes tend to get more pronounced no matter what you're looking at. Low volatility environments allow other currencies to move more independently, less correlations. The last thing here, though, if you're saying, well, that's good numbers, Paul and Frank, what the hell am I supposed to do with it? For an environment like right now, let's say crude is getting smashed, U.S. dollar CAD is actually not moving that much. You're not seeing a huge rip in U.S. dollar CAD. Well, it sets up potential pairs trades if you wanted to, let's say, buy that crude oil and you wanted to hedge against it with a dollar CAD trade, you could look at long crude, long US dollar CAD as a potential hedge, given that inverse correlation there. That's just a little bit get the gears turning. And same with, you could think of it in Canada as well, right? Like crude oil is getting hit, Canadian dollar is not getting hit that much. So I could buy the underperformer and sell the Canadian dollar vis-a-vis long US dollar CAD. Pairs trading tends to be the thing with correlation, or you're just looking at your currencies here and you're saying, oh man, I think crude oil can continue to go. US dollar CAD actually hasn't rallied that much. Maybe there's a value long in that US dollar CAD, or vice versa. Crude oil is going to bounce. I'm going to short dollar CAD. Just a couple of ways to think about what you use these correlations for.
Yeah, no, I mean, it'll be interesting to see how that plays out, where oil goes, where CAD goes. It's
wild market.
Yeah, wild market, and there's a number of other factors than just kind of oil going on. So
awesome, man. Well, that'll do it for today's episode. You've got, I don't know if it's Liz and Jenny or Tom. It's a surprise coming up next. Stay tuned. Peace.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader.